Hello, everyone, and welcome back to this week's Global Ship Recycling Market Update. I'm Ingrid.
And I'm Henning. And Ingrid, if last week felt confusing, this week felt like the market woke up with a full-blown raging hangover.
That's exactly what it felt like. Week 8 was volatile, noisy, and emotionally reactive. Freight moved, oil jumped, currencies shifted, steel tried to find direction. And by the end of the week, half of those moves had already started retracing.
Let's start with the bigger picture because the macro backdrop was anything but calm. Oil climbed from just over $63 per barrel last week to well above $66 during the week, before easing back down and settling near $65.90 by Friday.
And that spike wasn't happening in isolation. Markets are still trying to digest renewed geopolitical rhetoric, especially around Iran, layered on top of global tariff turbulence.
Exactly, tariff headlines coming out of the US injected fresh uncertainty again. Investors reacted first and then reconsidered.
Freight, on the other hand, actually had a more constructive tone. The Baltic Dry Index snapped a short losing streak and climbed about 1.2% this week.
Capes led the rebound, up roughly 1.7%. Panamaxes gained about 1.2%. Supras eased slightly, but overall freight felt healthier than it has in recent weeks.
So on the shipping side, we saw a bit of strength, but in recycling markets, the surprise came from somewhere else entirely.
Supply.
Exactly. Because despite Chinese New Year holidays being underway, and most people expecting a further tightening of available tonnage, local anchorages across India, Bangladesh, and Pakistan were suddenly stacked.
Collectively, about 151,000 light displacement tons across 16 vessels arrived or were delivered this week.
That's a meaningful number in today's environment. For an industry that has been starving for volume, that's a visible shift.
And when supply shows up, competition wakes up.
Prices are now creeping back toward the mid-400s per LDT for select, good-condition vessels.
Which is notable considering how quickly the market fell below 400 not too long ago.
And a few structural drivers are helping. Bangladesh has political clarity now. Pakistan has seen a halt in cheap Iranian steel imports. And India continues absorbing specialist tonnage.
Documentation clarity under Hong Kong Convention compliance is also improving across the board. The IRRC requirement is now aligned across Bangladesh, India, and Pakistan, which brings more structure and predictability to incoming vessels.
That may not move pricing overnight, but it absolutely improves confidence.
The one caveat, Ramadan has now begun. Working hours will shorten across the region, and operational momentum could slow over the next couple of weeks.
So this sudden energy may run into a temporary pause.
Let's move into Bangladesh because Chattogram pulled off a serious comeback this week.
It really did. After trailing Pakistan recently, Bangladesh leapfrogged back to the top of the rankings board.
And they didn't do it quietly.
Not at all. Buyers came out aggressively on larger, well-conditioned units. Preference was clearly for bigger LDT vessels, and pricing reflected that.
The second Cape bulker of the year was delivered there this week.
And sitting outside is a nearly 27,000 LDT LNG unit awaiting delivery.
That LNG arrival is significant. And there are reports that several more LNG candidates are being worked toward onward sail into Bangladesh in the coming weeks.
That kind of tonnage supports confidence, especially when you consider where Bangladesh was just a few weeks ago.
Fundamentals also supported the push. Local steel plate prices jumped about $16 per ton this week. That's a meaningful move.
The Bangladeshi taka also firmed roughly 0.3% against the US dollar, which gives recyclers additional breathing room.
Inflation ticked up slightly, from 8.49% to 8.58%. Not dramatic, but still something to monitor.
Even so, compared to the darker tone earlier this year, this feels like springtime for Chattogram. Fresh government, firmer currency, rising steel, strong anchorage.
And that combination was enough to push Bangladesh back into first place with improving sentiment.
Now India.
Along continues to feel like it's trying to have its cake and eat it too.
That's fair. They're still taking specialist vessels, offshore units, non-ferrous heavy ships, geographically positioned candidates. But when it comes to larger headline LDT units, they simply can't match Bangladesh or Pakistan right now.
Fundamentals were mixed again. The Indian rupee weakened slightly on about 0.15%, ending near 90.76 against the dollar.
Steel prices slipped below the psychological $400 mark, ending around $399 per ton.
That number matters, even if it's just $1 below. Psychologically, it reinforces caution.
Inflation in India also jumped to roughly 2.75% in January, well above expectations and a sharp rise from just a few months ago when inflation was barely above zero.
That steady climb from near stagnation to nearly 3% changes the domestic narrative.
And layered on top of that is global tariff noise. Policy uncertainty from the U.S. continues to create choppy waters for commodity-linked markets.
But strategically, India retains structural advantages.
Absolutely. It has the highest number of HKC-certified yards. It has the compliance infrastructure. And most importantly, it has capacity.
When competitors get crowded, a long doesn't run out of space.
That long-term structural strength shouldn't be underestimated.
Now Pakistan?
Pakistan relinquished the top spot this week, but not because it weakened significantly.
Exactly. Gadani has actually had a solid run so far this year. Local anchorage now shows 5 vessels at the waterfront. A welcome sight after months of relative silence.
Steel prices remain the strongest in the region at about $594 per ton.
That's still roughly $100 above Bangladesh and nearly $200 above India.
The Pakistani rupee also strengthened about 0.4% this week, closing around 278.49.
So fundamentals remain supportive.
The big shift remains the cessation of cheap Iranian steel imports. That has restored confidence among end buyers and allowed yards to refill plots.
Inflation, though, has been volatile. It dipped very low last year, then surged above 6% late in 2025, and now sits around 5.8%.
That kind of fluctuation creates a fragile purchasing mindset.
Still, with HKC upgrades progressing and tonnage finally arriving, Pakistan remains a serious contender, even if it's temporarily in second place.
And then we have Turkey. The lira weakened again, down about 0.26%, closing around 43.84.
Annual inflation eased marginally but remains above 30%, far higher than market expectations.
Rising food and consumer prices continue to strain local economics.
Supply remains muted. Demand exists. But recyclers are operating at the extreme ends of stretched margins.
Turkey stays steady in ranking, but underlying pressure is visible.
So looking at the pricing board this week,
Bangladesh sits at number 1 with improving sentiment, roughly $425 for dry bulk, $445 for tankers, and $455 for containers.
Pakistan follows closely at $420, $440, and $450.
India stands around $410, $430, and $440.
And Turkey remains well behind at $270 to $290 depending on vessel type.
So what does this week really tell us?
It tells us that even during Chinese New Year and when supply was expected to disappear, the market found tonnage.
And when tonnage appears, competition intensifies immediately.
Prices are edging higher. Documentation clarity is improving. Bangladesh has rediscovered momentum.
But Ramadan will slow operational tempo. Tariff uncertainty still lingers. Inflation trends remain mixed.
So maybe this isn't a clean recovery.
Maybe it's the market trying to steady itself after a volatile start to the year.
A hangover, perhaps?
Exactly. The question now is whether supply continues or whether this was just a brief spike before another lull.
Because at the end of the day, one thing still drives everything.
Supply.
Always supply.
That wraps up this week's ship recycling market update.
We'll be back next week with the latest developments from the waterfront.
Until then, stay safe and stay sharp.